Hello, everyone. Welcome to another episode of Proverbs of Prophet. Today, we're back with another episode. Of course, it's never me alone.
Sure.
It's myself, Osaned, and my sister,
Me.
Nundumis.
Hey, Bodo. I pull you with that one.
I'm well. So today, guys, we're talking about the basics and what makes investing or trading easier and much more definitive in how you approach it as an investor, how everybody in fact approaches it, especially those guys which are successful and those that with which we learn from. Today we're talking about fundamental analysis. We're also talking about technical analysis, right? So for me personally, I'm doing fundamental analysis. So what is fundamental analysis? So fundamental analysis is the process of examining a company's financial statements to help you decide if a stock is a good or not good investment, right? So here we have different documents that we look into.
Sure.
These documents sometimes long. These documents can be boring, but these documents are what make fundamental analysis. Because let's look at fundamental analysis like foundation. Right? Like when you build a house, the most important part of the house, or maybe let's say one of the most important, so that engineers will not come at me. One of the most important things is the foundation, right? The basis of it, what makes a company, what it is on, right? And how thick that is, and how secure it is. And so fundamental analysis is basically that. So when you look into a company like a Acer, when you look into a company like Google, Microsoft, Satova, when you look at all these companies, you go, what are its fundamentals? And its fundamentals, you can see that, you can read about that in the news when you look at financial news. But you can also look at something called statements. These main statements is a balance sheet statement, it is an income statement, it is a cash flow statement as well. So these are the fundamental things that we look at when we're looking into a company, and they give you an informed decision to make. It's okay, do I buy this company? Do I not buy this company? So basically, as she's going to talk about technical, we're going to obviously hear what she's going to say, but all in all, what fundamental analysis tells you is what to buy.
Sure.
She tells you
where to buy.
Exactly. So I tell you what to buy, she goes where, right? So basically, these are the foundational, these are the main differences between us. Okay, imagine, so what is a balance sheet? So a balance sheet, this is the company's asset, liability, and owner's equity. So by asset, maybe we could be talking about the company's ownership. But we'll see how many properties does it own. That's the asset part of it. So we're looking at the big scale of what this company actually looks like in a simple equation. So the simple equation is made up of assets, liabilities, and owner's equities, right? So the assets might be the building, it might be what the company owns, it might be the services that it holds, maybe a software, maybe, you know what I'm saying? So this is the essence of the company. It also has liabilities, maybe a loan to buy the property, right? Maybe they owe a loan to buy the property. Maybe they bought the cars in the company or the trucks, if maybe it's a logistics firm. All this stuff that it has bought on loan, on credit. So these things is what we call the liabilities, right? So if you know Rich Dad Poor Dad, it breaks down finance into these into simple terms, like an asset puts money in your pocket, a liability takes money out of your pocket. And so basically the liability is some money that we have to pay back to the bank or something, right? So then we have owner's equities. This is the amount of assets reached by issuing shares, right? So these are the number of shares that people own and they give us the money. That's the owner's equity. That now is owner's equity. Then we have something called the income statement. Income statement, we're looking at the transactions, so to say, right? So we have expenses minus income, right? The money that comes into the business and the money that goes out of the business. Fundamentally, that's what it is. And I wrote here, Uguti, here you get to know the company, if the company makes money and how it makes money. It's the revenue versus the asset. How much the company makes. And then there's net income. This is where the rest is in. This is where we can also learn what's okay. Now, when we have net income, meaning it's the money that we have after we've paid everything, that's the money that we have at the end of the month.
Yeah.
Now, you also learn from the income. What do we do then with that money? Then you learn what's okay. How does this, like, the amount of money this company, invest in research for the future? This is what tells you about the company, also the future of it and where it's focused on and where the money is made from. Also, it's very similar to also the cash flow statement. A cash flow statement, you ever heard entrepreneurs talk about how cash is king? Because the attitude that like cash is king comes from the fact that even when we go through, a financial recession, maybe even when you go through things like that, cash being there gives you the opportunity to invest. It gives you the opportunity to protect yourself. It gives you the opportunity to look into the future and actually make decisions while every other company is going down. So a company with a bigger cash flow is obviously more attractive than a company that has a lesser cash flow. And what I wrote here was, you ever heard of cash is king? This is how a company uses its cash to operate, right? The business and make it its investment. How it's borrowed from the bank and all. This tells us where most of the money comes from. It's also very important because it tells us whether a company will be able to survive slumps or anything else. So a cash flow statement, it tells us like the cash that comes into the company and if the company is cash generative or not. And these companies usually, when you look at cash flow statements, it's usually the boring companies, right? Let's just say, for instance, I own a vending machine, right? I don't have to advertise that much. It's just there, maybe at a convenience store or maybe at a school campus. I just have a vending machine there. Children just go put 20 rand notes and get whatever they want, right? So it doesn't need too much management. Just go end of the month. I just put in more stock, take the money out. So like companies like that are cash flow generative. Like a company that, like something that is also very cash flow generative is a let's just say maybe I cut hair, right?
Sure.
There's a whole lot of cash flow involved with that as well. So these companies, when you look at now major companies and like conglomerates, companies that are massive, what are the most important, statements to look at when you are a fundamentalist and when you're trying to look at whether to buy a company or not, is a cash flow statement. Also because, when we look at a cash flow statement, it is less likely to manipulate than an income statement. So that's why it's very important as well to consider before buying into a company. Now I understand, it might be very confusing because when you look at, the data this company's release, maybe an Apple will show you its cash flow statement or whatever. When you look at all these companies and their cash flow statements, it's, it doesn't look fancy, but like all in all, the most important thing is the fact that we profit, we grow. Also, in the same breath, what's very important is to know these things that are meaningful, these things that are going to take us from point A to point B financially, are going to be boring anyway. They are going to be boring, right? So it's like it's very important to, even though in the midst of it being boring, to spend time to look into it.
Yeah, boy.
And learn. You know what I'm saying? Like it's just like it's like reading, right?
Sure.
I'm starting only now to enjoy it. It was never easy because I'm looking at the people that I look up to. I'm like, oh, he was a reader as well. Okay, cool. So he was a reader as well. Okay, cool. So she was a reader as well. Like all these people kind of have this goal in common where they were readers, and I'm trying to read. And slowly, after a really long time of trying, I'm only starting now to learn. And I think that's what we underestimate about becoming better people or becoming more informed, is the fact that these things, they will be boring.
Right.
You know what I'm saying? Look at Warren Buffett's company. It is a boring company, right? Like it's not that exciting, right? But his company makes a whole lot of money. So I think things that are very meaningful in terms of growth, things that are very meaningful in terms of making us better people, this is a border. But to put in the time is essential. Exactly, because fundamentals are very important. You're just not gonna go and buy into a company without doing the research. By the way, do thorough research and don't just look at all these statements just from this year, just from last year. Really try to take maybe 5 years ago
10.
and look at how a company has been growing and look at what's okay. The future looks promising. This is what they're going into now. You know what I'm saying? I don't want to talk too much. We're like, but like I just want to tell you guys, like, this essentially is what fundamental analysis is, right? We just focus on the earnings and the income that we'll make, how the earnings of the company, the income of the company. That's fundamentally that, right?
Sure.
And we study that through a whole lot of these statements, and it is worth it.
Sure,
Right.
For sure. Okay. Before we even come to like technical analysis,
Sure.
Like Usanele is saying, you need to literally study these things, right? But for you to actually have access to these things, it's very important for you to know where to look.
Absolutely.
So there is something called a 10K or a 10Q. Sure. So Apple has a 10K report, which is an annual report where they'll tell you the performance of the financial year. Sure. And the 10Q is literally the quarterly reports. I personally focus on the 10K. Because I'm a long-term investor. But I look at the 10Q just for me to kind of be familiar with reading these things. So I train in a sense, but I focus more on the 10K. Sure. And I literally look at 10 years. Sure. In the 10K, you can find it in the SEC Edgar database. You can find it on Yahoo Finance. You can find it on Google Finance.
Yahoo as well.
Yeah. Or you can literally say, let's say you want to research, we will use the company that we all love. We will use Apple. If you want to look at Apple now, you sell Apple Investor Relations, and it literally will show you these reports. So that's where you actually go and look for the financial statements. So you have to know exactly where to go and look. And when you get this 10K, literally the financial statements are at the end. Sure. Even in this 10K, because it's long, you have to know what to look at. So I'll run you guys down to what's important. It's literally the first table of content. It's called business.
Sure.
This literally will tell you how the business makes money, what it spends on, where it sources its inventory, distribution. It will tell you what the business or the company wants to do. And then there's risk factor. You can also, I don't think it's that important, but because people have this unrealistic expectation with investing, it's very important, especially in the beginning, that you go through risk factor, because this will show you what, like, the things that are there that could stop you from getting the returns that you desire. So you can go over that. I think only through one financial report, and then it's almost always literally almost the same. And then I feel like personally it's one of the one that I'm going to say next is literally one of the most important ones. It's management discussion and analysis. You know how I said business will tell you what the company wants? It's called the MDA, management discussion and analysis. It will literally tell you how the company plans on doing what it said it wants. So it's more detailed. It will literally detail the competition, the sector. It goes in detail. Which is also it's a very dope fundamental, because you need to understand this thing, because if you only are going to look at the financial statement, it might be confusing. You have to figure out if that sector even works for you. So the management discussion and analysis literally goes into that. So download the whole 10K. I prefer the 10K. I don't even want to lie to you.
Sure.
Download at least 10 years and just go through like these 3 points. Business, management discussion and analysis, and the financial statements. Sure. So that you have a clear picture of the company. Not only do you understand the numbers, but you understand its fundamental. The company
Exactly. Sure. Absolutely.
For sure. That's for me. I just want to add that in terms of fundamentals, so that you guys know exactly what to look for.
Exactly. So now, like y'all know, we know actually. Sure. What fundamental analysis is now, but also we also know what this is a tool out. You know what I'm saying?
Sure.
It's not just a thing of telling you what it is, but we have where you can go find the information. So
sure.
There's no excuses, right? Let's just spend the time and do the work and close ourselves up and read and be informed and make informed decision especially when you use our money. Right?
Facts.
It's worth it to make an informed decision with the money that you have, right? So and put in a little bit amount of work and trust me, it is worth it.
For sure, for sure. So I want to go into the technical side, right?
Sure.
So after doing the fundamental analysis, you now know that, and you're confident with, okay, clean, I want to buy this company.
Sure.
Yeah, that is where technical analysis comes in, because now you want to dial in on the price, because that's where a lot of people make mistakes, because literally people will lose money in a good company, and it's not because the company sucks. Like, it's because you bought at the wrong price. Yeah, the trick to this thing is literally to buy exceptional companies at a fair price. And one thing in short. So this is how I personally look at technical analysis. Yeah, so I'll look at my graph. Yeah, there's a graph. I personally use the candlestick chart, because everybody that's ever taught me about the financial market has always taught me using the candlestick chart. Yeah, for sure. Yeah, plus I feel like it's more detailed and it's easier to understand when you know what it is. Yeah, so I look at my candlestick. So what I want to see at first glance, I want to see an increase to the right. Yeah, so we'll use my left, your right, which means this is what I want to see, like literally an increase to the right. It won't necessarily be a straight line. It literally will go up, like it will have an uptrend, a pullback, an uptrend, a pullback, an uptrend. But the general consensus would literally be an uptrend. So from first glance, I'm happy. So personally, I don't necessarily, because I know it's a good company, I've seen its consistency through looking at the fundamentals, and I have faith in its like innovation and growth. I don't care about the upside. What I focus on is the pullback. That is where I start getting excited, because I look at pullbacks and like downtrends as sales. I look at them as like discounts. So let me use an example, for instance. Let me take sneakers. Let me take sneakers for instance. If you're a sneaker lover in this country like myself, you know how frustrating that industry is, right? It's frustrating to get yourself a good pair of sneakers. And I'm a huge Nike fan. The problem is these joints will literally sell out in 3 seconds, especially online. 3 seconds, everything is gone. And every time, only a certain group of people have these sneakers. As for good bands are kanjani, bayaxhaphaza. Literally, only a certain group of people will always have the sneakers in multitudes. And that's what's we don't have it. So take for instance, late last year, we all wanted the Jordan 1s, Chicago high tops. The new ones. We all wanted them. November, that was everybody wanted the shoe. But again, it sold out in 3 seconds. Again, only these people have the shoe. So they resold the shoe how they always do. They literally will resell the shoe at a stupid high price. So they'll take a shoe that's worth 2.5 and they'll literally sell it at 8,000 rands. But because of the fact that we sneaker lovers, people really love sneakers and they want to buy into the hype. I got it first. People were paying that 8,000 They literally will pay that money. But if you're a person like myself that just wants the shoe, I don't care about the hype of whether I bought it first or not. I just want the shoe. And I understand how the sneaker world, I understand the cycles of the sneaker world like South Africa. I knew I just have to wait for the next release date. So earlier this month, they released the suede joints, the yellow and white suede joints. So now that everybody's looking at that shoe, that's the shoe that everybody wants now. I went back literally in the beginning of this month to go check the shoe. The price of the Chicago's. It was 2,000 rands. Now I like the shoe. Even a guy from Cape Town wanted to sell me the shoe for 1.8. The initial price was 2.5. Everybody bought it at 8,000 rands when it was overpriced. I relaxed because I understand the cycle. Is one thing you show. I can literally buy the shoe now for 1.8. Now it's a good price to buy. I waited for the pullback. I bought anything in short. So I use the same philosophy when it comes to the stock market. When everybody's buying, when everybody's excited, because I know the company, I rest because I know there is going to be a pullback. That is when I start focusing literally on the technicals. So we're going to insert a video just to give you a visual understanding of what I just said. It will kind of explain simply what I'm talking about. This is a technical example of what I'd look for in any company. Okay.
This right here is an example of the S&P 500, but it's a typical example that I'd use with any company index or ETF. So I'd literally look at its history. The longer the history, the better, because we are trying to look at consistency. So here we started from 1974 to 2023, right? This chart is called a candlestick chart, but it's not really clear now. It will get clear as we go on. But we are looking for the line to increase to the right, right? So the further you go to the right, the line has to be increasing, which means the stock is constantly gaining value. The whole point of doing technical analysis is to figure out where exactly to buy these stocks, right? Because I'm done with my fundamental analysis, I now want to pinpoint where exactly I want to put my money in, because I do not want to buy in a bull market, which means I do not want to buy when the stock is gaining a lot of value. Where you guys see the green arrows is where I'd be looking to put in money into a stock. These are dips, right? So think of them as sales. That's why it's important to take advantage of these dips or sales. And to be truly transparent, I've only witnessed two dips in my investing journey, which was COVID-19 and right now since March of last year. So a typical example is this, né? A company will literally grow in value, dip, grow in value, dip, grow in value, dip, grow in value, dip. Through studying these technicals, I take advantage of the dips because I treat them as sales. This is the 1 week time frame. We were previously looking at the 1 month time frame. This is where knowledge of technicals comes in, because it's one thing to see a dip, but it's another thing to really understand when to go in or when to now put in your money. You see where the green arrows are, that's when you have to put your money in, right? So it's understanding patterns, reversal patterns, to be able to maximize your upside. Look at the first green arrow. I don't know if you guys can see that, but it's not really that clear. But there's a pattern called the double bottom. This is the reversal pattern to the upside. And you can't skip steps. You have to understand a different reversal pattern. Really that clear, but there's a pattern called the double bottom. This is the reversal pattern to the upside. And you can't skip steps. You have to understand the different reversal patterns. Double top, head and shoulders, reverse head and shoulders, double bottom. We've seen the history of this index. Now it's time to focus on the current economic condition. From 2020 till March last year, the S&P was in a bullish trend, which means it was trading to the upside. So it was gaining value. Where you see the small blue arrow, the S&P broke through its support, which was the start of the new bearish trend. We are plus minus in the dip or sell season. The yellow line is the new support. Downtrends, dips, or sales is when we get excited to buy. I'm trying to demonstrate what it may look like up close. The red line is the resistance. Where you see the red arrow, the S&P just broke out of the downtrend. It went back to retest that resistance line and is currently going up. It could be a fake breakout, it could be a real breakout. 80% of the game is patience from here. It's your job to research and understand the lingo. I'm practically using the skill that I know from Forex. This is an example from my phone, so hopefully it's clear enough, or I explained it enough for you guys to understand simply.
And I think, like, before you even go in there,
True.
like, what are the reasons why us investors and people into the investing world respect a person like Warren Buffett, which is a dude that I believe is insane, because when you look at a Warren Buffett, is what makes him crazy in a good way
Sure.
is the fact that Warren Buffett did not have Warren Buffett. But also in the same breath, one of his famous quotes is, be greedy when others are scared, and be scared when others are greedy, right?
Sure.
That's what he said, right? So basically what she's saying was, like, everybody was greedy. She's like, okay, let me be fearful.
For
right? Because
facts.
everybody's greedy, right? And then when everybody was fearful, it's like, I bet now I can be able to buy because everybody's
sure.
keeping their money to themselves. They're scared to even make a decision.
For sure.
Now she'll be able to make a decision now. But how do we do that? With enough fundamentals and studying the analysis and studying the technical analysis. It's okay now. Now that we are here, I will buy at this price because this is the best price. I'm not going to buy when it's overpriced. I'm going to buy at this price when everybody's fearful. That's when I'm going to keep my money and that's when I'm going to come in. That's where technical analysis comes in.
So that was a visual example of how I go about using technical analysis. Even though that example was literally for the S&P 500, I use that literally for every other company.
Sure.
I won't lie, for when it comes to the JSE, I focus more on the fundamentals. I literally focus more on the fundamentals. It has to be a good company fundamentally, because as well as the JSE and the New York Stock Exchange, different environments, different like NJ. So I focus more on the fundamental when it comes to the JSE. But when I say take advantage, because even in the video, as you guys literally just saw, I say a lot of the statement you would take advantage of the pullback. What that means is, how a person can go about doing that. There's certain people that literally would in that downtrend, in that pullback, in that recession time, a lot of people, especially if you don't have time to sit down and watch the charts all the time, they'll dollar cost average down. Which means if I have, let's say, 600 rands, I want to invest in this company. I'm looking at, if it goes 30%, I just want to invest. So let's say you're looking to buy Sibanga Still Waters. It drops 10%. You put in 100 rands. It drops another 10%. You hold in another 200 rands. It drops another 10%. You hold in 300 rands. You've just invested your 600 rands, but in different price ranges. Because of the fact that these people don't have time to literally sit down and watch the charts. And the philosophy around that is like, what if you're not literally watching the charts and it literally reverses to the upside and you're not there to witness it? So I get that mentality, but personally, me, a person that has time to sit down and look at the charts, because I'm a forex trader, so looking at the charts it's not foreign to me. I have the time, especially when it's up, I'm chilled. But when literally I see a downtrend, that's when I sit down and I will literally monitor daily activities, like the daily performance of the stock that I want. So I'm looking at a reversal pattern. I'm looking at a breakout. That's when I start knowing, okay, sure, now this is time for me to buy. Again, it goes back to your factivity. That won't help you. You have to understand what a reversal pattern is. When to take advantage of a reversal pattern. You need to understand what a breakout is. When to take advantage of a breakout. This is something that you have to sit down and study. Because the it's boring thing doesn't work. It doesn't work. Maybe 10 years ago we could say that, I would be like, nah, it's cool. We don't have that time anymore. Nobody should be sitting down and convincing you this is something that you should be doing. We have to. Paul. One of the richest, all of the richest people that we know, that we look up to, are in the stock market. They own a considerable amount of stock. Which means clearly this thing is a blueprint. Clearly this thing is literally a wealth like it's a wealth machine. You have to understand fundamentals. You have to understand technicals.
Sure.
Because at the end of the day, I think it goes back to how much do you really want it? How much do you really want financial freedom? Because I don't want to lie to you. In the beginning, it's going to feel irritating. Because it's confusing. But because for me, when I started, I literally would look at these statements, especially the 10Ks, and I never used to really understand a lot of the language. I'd have to read the thing and still have a notebook, writing down everything that I don't understand, and go back to the same report and read it again. Because this is how much I want this. The life that I want for myself, the life that I want for my family, it requires me doing this.
Exactly. And also I think we underestimate things that are new. We're gonna suck at anything. Everything that's gonna be new that you will try to do is going to suck, right? And that's exactly how it is when you look at investing. But when given enough time, just like absolutely everything, that's when it works out. And success is not that hard. Not these days. Maybe in our
okay.
grandfathers' days, they had
sure.
to work the land, they had to till it, they had to make sure everything is proper. But we have to sit down, surrounded with a bunch of information, and just look through it and find a silver lining. And I think,
Sure.
A lot of people don't want to do things that are hard, things that are boring, but people who succeed have this in common. They do things that are hard and the things that are boring.
For sure.
And trust me, you can define this as boring all you want. But if you want to be successful in investing,
sure.
you just have to go through it.
Yeah. And to be honest, if a person like myself can do it, bro,
Mm-hmm.
you can.
Exactly.
They don't dream where I come from.
Sure.
It took me being around Osanele. It took me being around Oscar. It took me taking time and effort to make sure I put in this thing because I don't have time to play. I want what I want and I am going to get it.
Sure.
Hey, boy, Leon, I'm not interested in being financially free. I'm committed to actually doing it.
Sure.
Hey, boy, Leon, a lot of a friend of mine was literally telling me that I think sometime this week they were like, Bana, for a person that's putting up the reps that you're putting in, you live a very boring life. You live a very basic life. You're always researching and your life is boring. And I know it was a joke, but it was stupid. It was very stupid because I'm like, bro, I don't want to live a little. I want to live a lot.
Exactly.
And this is what it
That's
takes.
the requirement. Word.
This is what it takes. So as much as it can be boring, yeah, bro.
Sure.
Hey, boy, Leon. So I urge you guys, like for reals, take this thing serious. Sure.
But like, yeah, guys, please, man, have thorough research. There's a whole lot of things you're gonna find. We are not at expert level. Absolutely
sure.
not. It's
Not
gonna take a
even
while
our
until
fault,
we're there. But Joba's cool, Anati. Each one teach one, right? We're growing with each other, and trust me, let's go do it.
That's all it takes, man.
Word.
That's all it takes. You teaching me teaching you. We are family.
Exactly. With that said, I think that is it for the episode on fundamental and technical analysis. So please, guys, engage with us on TikTok, engage with us on Instagram.
Yeah.
Like, comment. What are your thoughts? What would you want next? We'd love to hear from you guys.
Sure. And also maybe tell us what you use
Sure,
if you are
sure,
into the
sure,
space.
sure.
Yeah.
And how long it took to even understand it, because it takes a while sometimes.
Ooh,
you know
it
what
takes
I'm
a
saying?
while.
So, but like, yeah, guys, I think that's it. So, like, we'd love to now close the episode, and yeah, take care,
Sure.
everybody. Bye bye.
You dig.